Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 7th, 2025, and we're diving into Smith & Wesson's third quarter fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Smith & Wesson, a leader in firearm manufacturing, has just released their Q3 results, and there's a lot to unpack, from sales figures to strategic insights.
Revenue and profitability overview. Let's start with the top line. Smith & Wesson reported net sales of $115 million for Q3, which is a 15.7% decrease from the same quarter last year. John, what does this mean for the company?
While the decline in net sales is notable, it's important to highlight that the gross margin was 24.1%, with a non-GAAP gross margin of 25.1%. The adjusted EPS came in at 2 cents, reflecting the company's ability to maintain profitability despite lower sales. This is largely due to their flexible manufacturing model and cost management strategies.
Operational efficiencies and future outlook. Smith & Wesson's new products accounted for over 41% of sales this quarter. How does this impact their future outlook?
The strong performance of new products is a positive sign, indicating that Smith & Wesson is innovating effectively. CEO Mark Smith mentioned that they expect the firearms market to remain steady, and they are well-positioned for continued success. However, they anticipate full-year revenue to be 5 to 10% lower than fiscal 2024, which aligns with their previous guidance.
And what about their capital allocation strategy?
They've announced a 13 cents per share quarterly dividend, demonstrating their commitment to returning value to shareholders, which is a positive signal for investors.
Financial health and strategic initiatives. John, let's talk about Smith & Wesson's financial health. What are the key points from their balance sheet?
Smith & Wesson has $26.7 million in cash and equivalents, with a notable increase in inventory to $198.9 million. Their debt stands at $109 million, but they maintain a strong balance sheet which supports their strategic initiatives and capital allocation plans.
How does this position them for future growth?
With a strong balance sheet and a focus on innovation, Smith & Wesson is well-positioned to navigate market challenges and capitalize on growth opportunities in the firearms industry.
Key takeaways. In summary, Smith & Wesson's Q3 results show a company managing well through challenging market conditions. With net sales of $115.9 million and an adjusted EPS of 2, they continue to innovate and return value to shareholders with a 13 dividend. John, any final thoughts?
Smith & Wesson's strategic focus on new products and cost management is commendable. While they face some revenue challenges, their strong balance sheet and innovation pipeline position them well for the future.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Smith & Wesson's performance in the comments below.